All right, ICT traders, welcome back to the channel. Just a very quick one right here. I want to show you what it really means to counter trade in the market. Now, a lot of traders out there make mention of this word, and yet very few people have an understanding of what it is. So I'm going to break down everything to you in this video in such a way that even a baby can understand what it means to actually counter trade in the market. Now, I want you to understand that almost every retail trader out there is counter trading. And I will explain what that means, because it depends on the time frame you're trading and it depends on the context of your trading. All right. But counter trading is not exactly a very bad thing because almost everybody is doing it. Now, let me show you what that means. I'm using GBP USD for these particular examples, and you can use it on any asset in the foreign exchange market, even in the stocks market, or even in the crypto market. All right, let's go into that in detail. Now, look at a very good example right here. If you have a trend, that is coming downward, all right, this is a downtrend. It's trending market normally, not a ranging market. This is a downtrend. Now, the market moves in a certain time frame, all right. If this downtrend is figured out in the weekly time frame, all right, in the weekly time frame, that means every single week you will want to see a candlestick closes lower. All right, you'll see price closing, taking out lows, taking out the low for this trend to continue. The components of a downtrend is normally a lower low and a lower high. When we keep repeating these same components as it moves down, lower low, lower high, lower low, lower high. Now, there is time and price factor in to this movement. As price is taking out this low, a retracement is coming in, because definitely you can't continue and keep selling something and then you are seeing the price becoming cheaper. Everybody is out there in the market to make money. So if you are selling something from this level, let's assume you're selling Apple wristwatch, right? And you're selling it at $900, all right? $100. The purpose of every business is to make profit. As it comes down to this level, the price drops to $100, all the way from $900 to $100. So every time you see price retracing, this retracement is the most important part of this out trading. This retracement is a chance for the seller to make more money, because as price is dropping, it dropped from 900 to this place, probably around 750 or 600. A retracement coming into this area will take it back to almost, let's call it $800, all right? $800. So this is a very good opportunity for them to make another money. As price comes down again, retracing, another opportunity for them to make money. So what I want you to understand in this is this retracement. Since we are dealing with a weekly time frame, please understand this. Since we are dealing with a weekly time frame, do you know that this simple retracement, if you drop down to the daily time frame, or you drop down to the hourly time frame, which is 4-hour time frame, will take you days, more than 2 weeks, sometimes a month, if you drop down to the daily time frame or the 4-hour time frame. All right. And the rule of trading is that you will buy low and sell high and buy low. Selling at this point is going to make you to lose. So we wait patiently for price to give us a better level for us to sell so we can make money. All right. So this retracement is what we are going to trade as counter trading. The overall trend in this regard, as you are seeing it from the weekly time frame, the overall trend is downtrend. But this retracement will take us forever for it to happen. We want to trade. We are retail traders. We are not positional traders. We are not institutions. This is why we trade counter trading. This is the trend, downtrend. If you are buying, taking advantage of this downtrend, since we know that price will not go lower forever, let me take out this and have a very clean chart so I can show you. We can't wait for price to get to that level for us to start selling in the weekly time frame. This can take more than 2 to 3 weeks. This small retracement you are seeing. And remember, when you are trading with ICT concept is what? Premium and discount. All right. So it is pretty much easy for you to start buying in the daily time frame, in the hourly time frame, knowing that price is going to retrace into an institutional point of interest in the higher time frame. So you are not just counter trading without knowledge, you are doing it with knowledge. All right, let me go to the chart and show you an example of what that means. This is it. This is the overall trend. I don't need to tell you what the trend is from looking at this. You know it's a downtrend, right? You know it's a downtrend. So how do you counter trade in this kind of trend? Now this is it. Look at this. This is a very recent chart right here. This is it. We have a break of structure looking for external range liquidity. What is the market after? The market is after liquidity always. All right. If price comes down like this, goes back up, what is below here? Below here is where liquidity is. All right. Retracing back up there, it's going to come back and fetch the liquidity. The liquidity here is called external range liquidity, and it will go back again, come and fetch external range liquidity, go back again, come and fetch. So this is exactly what price is doing. Overall trend is downtrend. Now that we have fetched out liquidity, what are we going to do? And this is the 4-hour time frame. Do you know that each of these candlesticks is 4 hours? All right. Are you going to stay here and be watching this in the 4 hour? This is a bearish order block, right? A bearish order block. Then there is a fair value gap here. Of course, you're not going to remain here and be watching at this to come back here forever, except if you have that much patience. Let's say this is in the daily time frame. Before this can come here, it can take 2 days, it can take 3 days, and you want to trade as a trader. And this is the only reason why you are counter trading, is this that you're going to be trading, counter trading. All right. So the moment you see price rallied up around here, so this is where the wonder happens. The moment you see price rallied up here, giving you this range, let me show you. The moment you see price closing above this range, you know that retracement is coming. Now, this is how you're going to be trading it. All right. This is how you're going to be trading it. Let me show you here. All right. Now, you know, price is going to come back to get a better price for the sell to happen. Please notice everything I'm showing you. If you pick your fib level here to here, put it here, measuring from here to here. What do you have there? Do you know that if you are selling here, you are selling at the wrong area, because the institutions will not be interested in here. So they will want to see price come to this place. So in the 4-hour time frame is what we are seeing. So it's pretty much correct for us to counter trade and buy until our point of interest. You are not a buyer in this trend as a blind person. The point of interest is in premium, P or I. So this is the only reason you are counter trading. All right. So imagine you want to trade the Judas swing strategy. You want to trade the ICT London Killzone strategy with this understanding. All you have to do is to drop down to either the 1-hour time frame and have a better understanding of how price is being delivered there. All right. So what you see here is a shift in market structure completely, which is telling you that we are having an uptrend coming in a downtrend overall, All right. So this is it. You are seeing this happening. So you can even look for an opportunity for price to come back to this fair value gap and buy, or to touch this bullish breaker block, because price have actually cleared liquidity below this entire area, even taking out the liquidity here. All right. So if price is to come back to this place, fine. I'm going to take the trade here. then I'll go up to this place. So this is counter trading. All right. So if you did not get an opportunity in this kind of environment, you can drop down to other strategies. Since this has given you this, how about your London Killzone strategy? This day has finished already. You can see how fast price is behaving. So you can't just be watching price happening. You are patient for almost 2 weeks to take a trade. All right. So this is your counter trading. In the 15-minute time frame, you're going to see a lot of opportunity. Look at this. This trade is not part of it. This one is not part of it. Even though it's part of the Judah swing, this is riskier for you to buy because we have not shifted structure. This is where the shifting structure happened officially. All right. It's risky to take that. So you can let go of that. This is where the market structure shift happened. You can see the displacement. All right. So price may not come back, but let's see what will happen in the coming days. All right. We are watching it. We are watching everything happening. You can allow price to behave according to how it wants to behave, but you are looking for an opportunity to trade that is inside your trading rule. Even if you are taking this trade from here, is wrong, because I don't encourage you to take a buy in a premium area. All right. It's wrong. All right. If price was to come here, we could have taken the trade. So you just wait and look for other pairs. But if you want to trade this, let's see how price is going to come. We want to see price give us that opportunity to trade. All right. So we're having this guy. We are having our strategy. We want to be buying. Our bias is the buy because we have a POI in the higher time frame. So this is Asian range. If you're trading the ICT London Killzone strategy, if you don't know what that strategy is, look at the link right here, click on it, and I'm going to put the playlist, the link to that playlist in the description of this video, or you can click on this link and watch the entire playlist. It's a very powerful strategy. We sweep liquidity below. If we can sweep liquidity below and go up there, yes, we have swept liquidity below. So we can look for an opportunity to buy now. We are not buying blindly. So we have swept the Asian low liquidity in the ICT London Killzone hour. The Killzone hour is between the time of 7 a.m. all right, to 10 a.m. Very powerful. All right, 3-hour window. So we will look for a shift in structure in the uptrend now. Shift in structure in the uptrend so we can take advantage of that. Now from 15-minute time frame, we can drop down to the 5-minute time frame or even the 1-minute time frame according to how we see it. So where is the high we want to take? If we can successfully take out this high, we have shifted structure and we can go up. All right. So we are watching it. If price gives us that, fine. All right. We are seeing it. We have created a new high right here. If you drop down to time frame lower than this, you can see things even bigger than this. All right. We are watching price. If we can take that particular, all right, we have shifted structure now. We have shifted structure now. This is the right time for you to be a buyer. To be a buyer, targeting where? Targeting the opposing liquidity. I hope you're seeing everything I am explaining to you. So if you are to take trade, how are you going to do it? Even in this shifting structure that happened right here, what you need to do, market structure shift, right? What you need to do is to pick your VIP level again, measure from here to where price will start coming down. Let me see where price will start coming down. All right. So from there to this place, where are you going to take your trade? This bullish order block is where I want to take my trade. It's as simple as this, guys. I'm not only backtesting. You can check my community. I do post analysis and I do post trade once in a while. You can watch and see what we are doing right there. All right. It's not only backtesting that we do. All right. That's almost 3:1. Now, you see, the thing is this. Whenever you're trading this strategy, I want you to always be mindful, because it's a very short time trading window. You need to be very mindful of a lot of other factors. All right. But the most important thing is that you're watching this area as where your target is. And once your trade goes into 2:1, you can close your position or you can break even. All right. Normally the strategy is 20 pips. is 20 pips. That's the ideal, 20 to 25 pips according to ICT, somewhere around here. This is the ideal strategy if you're taking this concept. I'm looking at this opposing liquidity so you can get advantage of that. So this is almost 2:1, right? 2:1. You can decide to bring your stop loss closer if you wish to, but the strategy according to the way ICT taught it is at least 20 pips. All right, 20 pips. So let's look at this. Yes, we're in the trade. We are watching the trade happen. All right. Okay. You now see it. You now see it. You have gotten your 20 pips out of this trade, and look at this. Price actually traded into this area. There is a bearish mitigation block right here. So price traded into that area, and look at the quick push down. All right. Let's see. Damn. You can see that is why I said you need to stick to the 20 pips as ICT taught it. 20 to 25 pips, I think. That was how I shared in those lessons. So you can go ahead and check it right there. So you can see we are counter trading. I don't know what, maybe news came in or something. Let's see. It later went up. Let's see how it's happening. All right, we are done for this day. You have gotten your 20 pips. If you can follow this simple strategy alone, you can make up to 40 to 60 pips in a week. 60 pips in a week is pretty decent for a trader. All right, so let's see for another day again. Let me take it back to 15-minute time frame. What we are doing is that we want to reach where the 4-hour POI here, the order block and the fair value gap, but we have not yet reached there. That is where the institutions will be interested in selling. All right, so everything you are doing is counter trading, but you are doing it with knowledge. All right, so let's see for another day. All right, another day is here. Asia has opened. The range is this one. The indicator is right here. Asian range Killzone. You can find those everything in detail in those videos I've shared. So let's wait for sweep of liquidity below. Let's wait for sweep of liquidity below and see if we can. Yes, liquidity has been swept below, dropping down to the 5-minute time frame or the 1-minute time frame, and see a shift in structure. The shift in structure is telling us that it's going up there. All right, let's see if we can see that happen. We are watching it. So this is it, guys. The shift in structure. Look at this. There is something very different about this simple one. The low kept on coming down. The low was here, and we have it right here. I don't consider this as a low, so this was the low. All right, so let's see it. The practicality of this is everything I'm showing you. Shift in structure. Now, in the 5-minute, in such kind of movement, I'm not sure you will see an opportunity to trade, but let's see if we can see an opportunity. This is where we want to see price come to and take us into this and give us our 20 pips long position. How the tip is where we want to enter. I would love to enter from the tip because I'm seeing something like a breaker right there. So 20 pips. Of course, you have to calculate your risks. 20 pips, somewhere around there. That is your target. All right, so almost 2:1 again. So let's see if price will come back in this and get us in. And let's see. No, price never came back. You see how fast price moved away from this level. Price never came back, but we are still in our rules. You should not feel bad because it never came. Sometimes it happens like this. Just let it be. Don't chase the market. We wanted price to come back and take us in. We can go for another day and see if we can see an opportunity. All right, let's see if we can see an opportunity in the next day to take trade. Whoa, so we actually missed that one. All right, we actually missed that one. This is the place where price is currently. So this is the basis for counter trading. This is the basis for counter trading. This was NFP and it went up. That is how you counter trade. until you reach that point of interest. Now you can stop counter trading because you know price have reached a point of interest. So in this entire movement, if you're using the ICT London Killzone, you've gotten at least one trade in one of the days. Almost 3 days movement, you've gotten a positive trade in one of the days. This was a missing trade. If you're taking the trade like that, it's okay to let it be. If it doesn't happen, you can find other entries in other currency pairs. You can find another entries in other currency pairs. In Euro USD, maybe you will find. In Aussie USD, maybe you will find. So cumulatively, at the end of the day, you will have at least 60 pips for the week. I think that's decent enough. All right. So this is basically a demonstration on how you can counter trade with any strategy you're using, whether you're using normal pure price action, you're using the London Killzone. I normally trade the Killzone in London mostly. That is why I'm showing you from London. All right, guys. I hope this video is explanatory enough. And if you have any question, let me know in the comments. I will be right there to answer you. Thank you for watching, guys. See you in my next video.